While the economy continued on a recovery path in April, domestic-oriented activity was affected by tighter containment measures in the later part of the second quarter of 2021. The latest key indicators, which include total transactions encompassing both online and physical spending, and mobility indicators, suggest some tentative improvements in July. However, it remained below pre-FMCO levels. In the labour market, indicators in the first 2 months of the second quarter showed continued improvement, but the imposition of the FMCO has affected the recovery in June. As a result, employment levels declined in the second quarter to 29,000 persons, while unemployment rate remained elevated at 4.8%. Data from SOCSO also showed a similar trend, where smaller jobless claims and improvement in job placement rates were observed up until May 2021, before worsening in June 2021. While the labour market outlook in 2021 has weakened, the expectation is for the labour market to recover going into 2022, but at a more moderate pace. This is in line with the faster progress of vaccination and expected lifting of movement restrictions, which will support an improvement in economic activity. Growth prospects in the third quarter of 2021 will be weaker due to the continuation of the FMCO. However, growth is expected to improve in the fourth quarter of 2021. On the external front, strong global demand conditions, particularly in major trade partners, and the tech upcycle will support exports and production activity. On the domestic front, a rapid vaccination rate will allow the gradual relaxation of FMCO restrictions and enable the resumption of economic activity. Ongoing policy support for businesses and households, as well as the continuation of large-scale infrastructure projects, will also be key factors underpinning growth in 2021. Thus far, we have seen strong export performance, driven by the strength in external demand. The faster expansion in exports was broad-based across products. Going forward, the rebound in major trade partners' growth is expected to support Malaysia's exports. Malaysia stands to benefit from the robust global demand for semiconductors to cater to increasing needs for work-from-home equipment, digitalization of businesses, and medical devices. E&E manufactured exports, including petroleum and chemical products, will continue to benefit from the strength in global business and consumer demand. Rubber products will also remain supported by higher healthcare and hygiene requirements in both the medical and non-medical sectors. The strong exports performance would continue to support the recovery in the domestic economy, including through job creation and income growth in export-oriented sectors. Salaries in the export-oriented manufacturing and services sectors grew by 7% and 2.6% respectively in the second quarter of 2021. In particular, the E&E sector is expected to benefit from the ongoing global tech upcycle. Sales of electronic components are projected to record double-digit growth in 2021. Malaysia has been benefiting from this strong demand due in part to our strategic position in global value chains as one of the larger net exporters of semiconductors. Based on the bank's industrial engagements, E&E firms will continue to benefit from the tech upcycle. Several firms are reporting full order books, installing new plants and machinery, and venturing into new products such as data centers and medical devices. Our quarterly bulletin also features a box article titled "The Global Chip Shortage, Implications and Opportunities for Malaysia," which discusses how ongoing global developments impact the domestic E&E sector in further detail. On the domestic front, the rapid vaccination rates are expected to ease demands on the healthcare system, thus allowing for safer and and faster easing of containment measures. However, conditions currently vary by states with different degrees of vaccination rates and ICU utilization. Hence, different states are expected to transition to the next phase at differing times. With the implementation of containment measures would weigh on growth, there are at least two factors which have partially mitigated this fact. First, digitalization and automation have continued to gain traction to help cushion the impact of the movement restrictions and support the recovery momentum. In the first half of 2021, the number of online banking transactions grew by 36%, while the number of e-wallet transactions grew by 89% compared to the same period last year. More merchants are also embracing digital payment solutions. For instance, merchant registrations to accept QR payments had increased by 57% to 1 million businesses by the end of June, compared to the same period last year. The export-oriented subsectors also have the highest capital intensity and automation among other manufacturing subsectors. In addition, from our industry engagements, firms address the production gaps while complying with the strict labor restrictions by increasing working days and shifts and deploying new capacity from prior investments. Second, policy measures to assist households and businesses have provided some support to growth. And this include labor market policies, cash relief, and cost reduction measures. Growth will also be underpinned by higher oil and gas-related production. This includes the operationalization of the Petronas Floating Liquefied Natural Gas Dual, or PFLNG2 facility, and the restart of the Rapid facility. The pickup in investment activity is also expected to support growth, underpinned by the continued progress of large infrastructure projects such as the ECRL, MRT2, LRT3, and Pan-Borneo highways. Strategic initiatives to catalyze nationwide digital transformation, such as My Digital Initiative, including Jendela, would also spur high value and productive investment over the medium term. Overall, the Malaysian economy is projected to grow between 3% and 4% in 2021. The downward revision reflected the impact from the implementation of the FMCO nationwide. On a seasonally adjusted quarterly basis, Malaysia's GDP is expected to return to pre-pandemic levels by the fourth quarter of this year. Export-oriented sectors will see a strong recovery in line with improving global demand. However, high-touch segments such as consumer and tourism-related are expected to recover at a slower pace. The gradual recovery in the economy will be supported by the expected reopening up of the economy, some materialization of pent-up demand, ramp-up in commodity production, and continued investment in large-scale infrastructure projects. At the same time, we acknowledge that the near-term growth outlook remains uncertain and is highly dependent on COVID-19 developments globally and domestically.